Radio Plus app, free for iPhone and Android devices.
Drew Mattis, Managing Director and Chief U.S. Economist at UBS Securities in Stamford, Connecticut. Drew, good morning and welcome. I suspect there's plenty of room for debate on this, given the questions about the dropout factor in the American workforce, but more than once this week I've heard this concern being voiced with the same phrase. Is the central bank behind the curve? Shades of 1994. Do you share any of those concerns?
UBS, we do, and the main reason for it is because when we've looked at why people are dropping out or what the most recent decline in the participation rate is being caused by, we come to the conclusion that it's the return of retirement. So during the crisis, after a lot of wealth was lost, a lot of baby boomers decided they probably couldn't afford to retire. Well, with the run-up in equities we've seen and the rebound in home prices we've seen, a lot of those same baby boomers are now thinking to themselves that they can retire, and they're starting to do it. And we don't view that as a negative. We view that as a positive, but of course it also means that you probably have less slack in the labor market than is widely expected.
And why does that affect tapering, if you will?
Well, because what it's telling you is that the participation rate is not going to rebound quickly. And if it doesn't rebound quickly, then what that means is that the number of jobs you need to create to pull down the unemployment rate is falling. And so, if we're averaging 200,000 jobs a month, that's probably double the level that we need to see in order to pull down the unemployment rate.
And what's the danger?
Okay, let's stop it right there. Hello, welcome in from Sunnyvale, California. I'm Mark Vierra. This is my weekly technical analysis video. More or less just some basic stuff that I'll go through. People are retiring. I'm not sure I'm buying that. Anyway, let's get into some longer-term monthly charts here. I always like to start out with the monthly chart. This week we saw some pretty bearish activity. And first monthly chart, I just want to show a wide lens view of the trend lines I have drawn. And then we're going to zoom in here on the next chart. So last video was pretty bullish on the market. Trend was up. Price, volume, not really showing any signs of any kind of a pullback like we've seen. But what I have mentioned in previous videos is when you have parabolic, it really only ends up but one way. And this is illustrating it. This channel here on the monthly chart is pretty much illustrating that parabolic channel. And of course, this is how ultimately you're always going to break down out of these types of like your rising wedge is always going to end up as a bearish pattern, and your falling wedge is always going to end up as a bullish pattern, because eventually it's going to fall out of those trend lines. Now, I'm not a big fan of falling and rising wedges because you have to keep adjusting the trend lines. You don't get really a great kind of pattern measurement that I like to wrap my arms around. So what else can we say about the monthly chart is it's falling below this this trend line. So the longer term is telling us that the market is bearish. One thing about time frame charts too is I don't overemphasize a longer term chart against a daily or an intraday chart. I sort of look at time kind of both ways, where historically a longer term chart is showing you further back in time, and as time moves forward to the present, I don't see that as having more or less influence as, say, an intraday chart. You see what's happening on an intraday and how it bleeds into the daily and then eventually into... So I sort of look at it from both ways in terms of the way time flows. So let's see. Now the weekly is especially good chart to look at. Again, I want to just wide lens view. I want you to keep your eye on this blue dashed line. Now, I have not changed this line for a long time. Not near a bit have I changed this line. And we zoom in on that, we can see, here's that blue line, and this is going to give us a pretty good perspective of a support pivot. Okay, pivot means it's gone above. I don't like this black. I'm not racist. I can just see, white draws better. Okay. Here we popped above. Okay, and that's a pivot where resistance. See, here's resistance. All right. Now that's becoming support. All right. So it's not going to be surprising to see this if it loses support here and breaks down, and this will be another. What I'm looking at is the reaction the trend has to it, and it's really just almost magical how these trend lines can have reaction to. That's what I like to see. So what else I have in here? Different cross swaths of how we lost. We had a pivot break below here, and then there's also this that we broke, and we've just been really breaking through these trend line and pivots, and ultimately, like in this video, I usually try to show some kind of bias up down. Yeah, really, I don't know. Could very well see a support bounce. Of course, when I look at volume, I am tending to think that we probably will see a bit more downside just because of the, I'm seeing signs of stopping volume, but just, when I get into volume later, it's price isn't reacting to the size of volume that you would want to see to mark a reversal. So I think there's a bit more downside. Could very well be wrong. In any case, these are some important levels here. I got this, to be exact, right down in here would be your 1772, and further move down here, we'd see, more than likely we'll see some respect paid to these. 1775 would be a intermediate term S2, I would call it. In any case, that is the weekly chart. I do have a couple more weekly charts here. This is just a basic trend channel. Also going to look at that trend channel on the daily. We had this longer intermediate term rising wedge. Let's zoom in on that. So right after this long-legged doji, which last week I thought was a pretty bearish because it closed above midpoint, and looking at volume, I really believe that institutions were buying into that weakness. Right now, this is institutional selling going on right here on this candle. So just to zoom in, this is a very important trend line because of the support touches. Now usually, they say the more resistance is tested, the more likely price is going to break out. The more support is tested, the more likelihood that you're going to lose support. And when you look at this, yeah, we had more touches on the bottom part of this rising wedge than we had, touches on the upper end of it. So that was a little bit of a clue in there. So we have a rising wedge breakdown. This is the broadening, right-angled, descending and broadening pattern, which I've got measurements. Now that we've had a confirmation break of this pattern, I have put measurements for expecting targets from them. So that's a breakdown of the weekly rising wedge and right angle broadening descending. Okay. What else do I have on the weekly? I have a few more weekly charts. Fib Extension, this is a good one. It's really showing us a good clean. We had a leg, we had a correctional ABC, and I'm always saying how the 50% is always a good level to pay attention to. When we hit resistance, over a good intermediate term, almost you could consider a long-term resistance, and broke down below the 38. Zero would be, of course, possible double bottom. Don't want to call it that, really. More or less, it's ultimately, I think this level here, let's clear all this out. This level, I think, will find major support, and I would be surprised to see us drop below this 1766. And below that, we would be entering, I want to call this a near-term pullback, but below that, I would say we're looking at a little bit further down the road, more of an intermediate bear market, but that's still yet to be seen. Good chart, this Fib Extension. Now that we've pulled back, we can take a look at a retracement. And the retracement I have is going to come all the way back to the beginning of this leg before this correction, okay? Where the extension, we went to the high, pull back, and we're looking at extension. Right now we're looking from a intermediate term low to an intermediate term high. And again, this 50% is what I want to say is where we're going to find major support. That would be the 1750. 1771, we're going to see some chart patterns that are going to have that in there. So those are important levels. There's nothing magical saying that we're going to see a reversal off those levels, but those would be what traders are looking at for possible entries and whatnot. So I chose to do measurements on the rising wedge for the weekly, and I used the right angle descending broadening on the daily. That's how I did measurements. Before I show you that, though, let's take a look. And at the end of this video, I'll show you where I got this. This is an Ichi candle oscillator, and I'm looking at it on the weekly chart on how these areas were ultimately good buying opportunities. See, this area here, buying opportunity. Now we're down below that line, so ultimately, I know this pullback is going to be good for buying opportunities, and I don't want to get into too much of a trading method, but traders work all different ways, and your more orthodox, purist trader is going to be waiting for confirmation and volume for signs of reversals. Some traders will just spread out, position size, and manage a trade where you can do what you call catching a falling knife, and that's sort of kind of the way I roll sometimes. So that's let's see, weekly chart pattern of the week here is this rising wedge. Not a particular big fan of rising wedge measurements, but I do get a 1719 target on the longer term pullback of the rising wedge. And now that concludes weekly. Let's get into some daily charts. Here's your basic just daily trend channel. Okay. And I'm going to zoom in on that. And I'm just showing this is a look at the rising wedge and from a daily perspective. Nothing much to see here. Broke down. And that's what parabolic does. Spoke already about that. Let's see. Here's a 3-year regression channel, and we're still in the upper range. So if this pullback does have legs. It's got some room to go. This is how you can take a look at that. What else do I have here? Moving averages, showing us what we already know. We're breaking down where you have near term falling below your longer term averages, and that's just a lagging indicator. Nothing much to see there, but what I do like, and when I see pullbacks like this, I do want to look at moving averages, where I'm seeing previously at the 100, between the 100 and 120 day, we saw a reaction in there. Okay, these were buying opportunities in here. Now, the other thing to note about this, though, is the distance from the 100 and 120 day is a little bit further in separation here. So, I don't know, if it gets to the 100 and 120 day average, I am going to be happy. I'd love to see that. Even down to the 200 day down here would be great. Oh, what happened there? So, anyway, clean breakdown below the 50-day moving average, and possibly, this right here is about at the 70-day. I don't have the moving average in there, but that's where we're at. So the possibility to get down to the 100-day is in there. We'll see. I would like it. That would be great. Let's see, daily fibs, we've covered that in the weekly. Let's take a look at some chart patterns. And I did measurements on the right angle broadening descending, and I did measurements on the double top. Now, this is your double top, and measurements would go from the lower valley to the peak, and this is our confirmation. So we can say the double top is in play, and this right angled broadening descending, here was the confirmation break here. So we got two near-term chart patterns in play. Not much to look at with candlesticks. They sort of fooled me last week. This doji with amount of volume, like I said, I thought we were bullish last week, but it was inevitable. With this, what's funny about the news, they were always putting some reason that just makes me laugh. When you think about it, you have a stock market that goes up 10% in 1 year, like in 2012. That's a lot. That is a lot. And then you get a market that's going up 30% in 2013. Why do you need an excuse other than these institutions are naturally going to take profits at some point? So it's not, I don't know. I'm as guilty as anybody else. I listen to news, but so let's just get through this. Here's some measurements I did on the 1750. I think that's a good number. Good, nice psychological round number. But just to go over the measurements now, we're 1850 to 1800. So the point of break subtracted from the peak, and equidistance would be 17. The more conservative number now, and this also coincides with some of the other levels that I was looking at previously now. This is using 44%. This is a target meeting price multiplier. So that's giving you a conservative and aggressive target, basically. The other chart pattern is that double top. And let's see what measurements we get there. Is going to be pretty similar. With an equidistance of 1780, the right angle descending we were subtracting from this, but in a double top you're going from the lower valley to the peak, and then your lower valley, that's your confirmation. Okay, and I think 10 more handles, so that's not an outlandish target right there. I think the double top will probably be an easy target to achieve, really. bigger scheme of things. So now let's get into volume, and I'm getting nothing really confirming, nothing jumping out at me. Sure, we got some, previously we had a reversal here, and that was the amount of volume. Now we're getting the same amount of volume there, but minus this bottom tail. Okay, this is a down thrusting. This is shaking out the market, running stops. Institutions already know what's going to happen beforehand, so that's the job of the stock market, is to drive out speculation, and that's how they do it. They run stops. That's just a natural part of the market. It will always be that way. You just have to live with that. So, what else am I looking in here? Price dropped below. These were high volume nodes I was looking at, and we pivot below that. We broke. This is a major trend line break that we gap below that. Drop below the point of control. Now we're heading down to this will be an important right there at that 178, 1780. That'll be an important level to pay attention to in terms of reversing. The other thing too is we look at this as a lack of interest area. So if we bust down below that, we're in full tilt bear mode. So I don't know if that's going to happen really. I don't think it is. I don't know that institutions are going to let price get too far down, and they don't want to give people an opportunity. That's the way it works. Lower the price, the better opportunity isn't really on an institutional or these market operators' agenda. Okay. So higher volume, possibility of climax, but now we'll look at the intraday, and really that's not supporting. We're not seeing any stopping volume. I mean, you can call it stopping volume, but stopping volume is no guarantee that price is going to reverse. Okay, it just shows that a market is trying to slow down. And I speak a lot in terms of the speed of the market. I hear, new catchy terms, liquidation breaks, whatever, The market is moving fast, and it's the speed is what I'm looking at. And sure, these high levels of volume are not institutional interest in reversing price. It's you can look at it as some stopping volume, but like I said, that's no guarantee. And the best chart to look at in terms of the speed of the market is the non-expanded monkey bars. Before I get in there, let's just go through these in order. This is a daily monkey bars. This is a market profile. This playground area here is 70% of the trading activity, and to see that just falling way down below that means there's not a lot of volume support by price. You've got these high volume nodes that it just blew through. Okay, along with this is an important pivot too that it blew below. And of course it's going to find support in this area of no interest. So that's one thing I can look at to see, is price slowing down. Okay. The other chart, go through these in order. Your near-term market profile is pretty much confirming. Of course, on a 10-day, we're not going to see much volume here historically, but just to see the gaps between these playgrounds, that is telling about a fast market. But the best one to look at now is this one right here. Gives us a composite view with, and I have it stacked with volume over here, and I'm just marking this as thin volume by price, and it's not supportive of a prolonged, move down lower here. So I do believe the market's going to slow down, but now again, no one can tell you when the market's going to slow down. Okay? No one knows when the market's going to reverse. We will be looking for price over time and volume, and that will ultimately tell the story. Okay? So that's volume. Not much else here. We're going to look at some U.S. Treasuries. Okay, I hear, oh, hedge funds are selling. No, institutions are selling. Hedge funds are look at there, they're buying U.S. Treasuries. So, hedge to hedge means, you're hedging your bet. So they're not, hedge funds aren't buying stocks. Hedge funds are buying stuff like U.S. dollar, gold, treasuries, or your unloved sectors. So, which you're going to see a rotation now, where hedge funds will be taking profits off of stuff like U.S. Treasuries, and you'll see institutions start getting into more of your unloved sectors. And that's naturally the way it works. Did I even say anything on U.S. Treasuries? No, I didn't. Let's go back up in here. I think we're seeing a strong positive movement in U.S. Treasuries. I think is ultimately good for the stock market, along with the U.S. dollar too. We're seeing this cup and handle here break out, and it's pretty much got its target off of this cup and handle. So in terms of chart patterns, we're seeing a target met there. This is a pretty good, important trend line pivot that it broke too. So you might see U.S. Treasuries. We got to pick up a volume up in that area. This volume node right here is where it's finding resistance. So we might see some relaxation in U.S. Treasuries, but I think that they're going to remain stable along with the U.S. dollar. I think we're seeing weakness in the U.S. dollar over the whatever news. Before we go into the U.S. dollar, I always like to take a quick look at this is a 30-year yield index, TYX. We saw a peak of 3.976% in yield price, and that prompted a move lower in stocks. And this is probably one of the biggest reasons an investor is gonna move out of cash or treasuries and get into stocks is that lower yield. So I know I've been saying it for a while. I said it on this weekly candle. I said it on this weekly candle, and I'm going to say it again. Lower yield makes stocks more attractive. So, not telling us when there's going to be a reversal. There's really no such thing. No magic 8-ball in this stuff. U.S. dollar, I was expecting, a break out of the rising wedge. I had this rising wedge in here drawn for a while, but now I'm seeing this long-legged doji here is closing above midpoint. Do have some sizable volume in there. So this is stopping volume, and price is agreeing with it. So that's a good sign that the dollar, and I do believe it's going to remain stable. I don't see anything. I don't see any reason to rush into buying precious metals or anything. Not when you have CPI index and U.S. dollar is stable. Just doesn't make sense. I don't get it. Gold bugs. I'm sorry, but I don't know. I don't know how you guys can do it. In any case, the mirror image of that is in the euro. We had the falling wedge, and almost identically, we have this type of blow off the top type candle. Okay, this is an up thrust closing on the low. Got an alert set up in here, but doesn't look like it's going to get there. So I would like the euro to get to $1.38. I think that would present an opportunity. I'm also looking at, the British pound. Sterling is looking attractive to me. Okay. Of course, this video isn't about making any trade recommendations, just throwing some technical analysis out there. I'm going to put together my trading log, so you're going to be able to see more of an in-depth what I am trading if you're interested. And I'm not trying to sell you anything. I'm trying to show you information, where to find it. Okay. This is HotStockMarket.com. In the group section here, you've got futures trading, some of my favorites in here. I'm in here. This is where that previous weekly Ichi candle, you've got Ichibomb in here. He writes his own code, and there's a couple different flavors of that code in here that you can copy paste into your Thinkorswim browser. But that's where you can find the information. I also want to quickly mention that in the groups, not in the groups, but if you come in here, you got your Forex forums. I'll post some of my Forex trades in there. Down here you see trade journals. I always mention the importance of writing things down. Now, there's a lot of traders in here. There's too many to name. But these are real traders. They're not trying to sell you anything. They're writing down their trades. You can get a gist of the psychological, the mentality, the methods. I mean, every method and trading techniques are all in these logs. And there's a lot of good ones in here. I'll have to mention my favorite. This is hosted by Rock Sexton, and this is a divergence reversion trading and trader psychology. He'll post his trades, his ideas. It's really good stuff. So other than that, you can check out my trading log. I'll have that put together here shortly. Reddit, StockMarket, subreddit StockMarket. This is another place to find information. So that's all I got for a video this week, and see you on the boards.